and welcome. You have tuned into the weekly edition of Your Trades on ET Now. I'm Shrishti Sharma and with me is Lisa today, and for the next 30 minutes we will be talking that all throughout that happened in the week gone by for the Indian markets, and not just that, going ahead, what is the outlook that we will discuss in detail with our experts. But let's get started, and firstly onto the summary of this particular week. Firstly onto the index level, what a smart recovery that we have seen on the benchmark indices. Till Thursday we were not seeing that much of a participation from the Bank Nifty index, but on Friday we have seen all the banking stocks powering and rallying as well. But for the Nifty 50, we did manage to scale past that 19,800 mark. Now 20,000 is what we are eyeing at. All the large caps were once again seen to be getting back in action from the likes of HDFC Bank, Reliance. All these were quite supportive, and you can't take out your eyes from the power stocks. Powerful moves coming in for all the power companies, be it from the likes of Tata Power or from other PSU counters like NTPC, Coal India. They were all shining bright. But not just that, if we look at the broader markets, then they were shining too, because the broader markets index did hit an all-time high yet again, and the Nifty Mid Cap 100 was up by 4% in the week gone by, while the small cap index showed a move of around 3.5%. But onto the sectors, Nifty Realty came out and emerged as the top gainer, with the index gaining 5%. The energy, like we were mentioning, was up by 4.2%. PSU basket was up by 3.6%. But on the losing side, if we talk about, then FMCG, auto were some of the index that were not seen to be losing, but they were almost flattish trade that we have seen. Onto the Nifty 50 gainers then, Coal India, L&T, HCL Tech emerged as the top gainer. But on the flip side, if we talk about the losers, then M&M, Axis Bank and Eicher Motors were seen to be declining anywhere between 1 to 1.5%. But we managed to start this particular week on the back of Uday Kotak resignation news, though Kotak Mahindra Bank was also seen to be recovering, and especially on the Friday we have seen good moves, because on Friday we actually saw RBI coming up with the announcement that ICRR relief could be there, and that's ICRR has now been taken back. So that was the news on the banking space. But Jio Financial was also in the news that it has finally been removed from Nifty 50, and it was a week indeed of full of block deals. We saw block deals happening on Zomato, BKG, JM Financial, Dreamfolks and IRFC. So a week which was yet again an exciting one. PSU basket, railway, defense, sugar, you call it, and many sectors were seen to be buzzing. But going ahead, the big question actually lies that 20,000 is what the index is looking at. How close are we to from that particular target? The broader markets will continue or not? G20 summit, what it means for India, as well as the powerful rally in the power stocks. How much more steam is left over there? So let's try and find an answer to all of these questions, and let me welcome on board two of our very special guests onto the show. We are being joined by Rajesh Palviya, a head technical and derivative research at Axis Securities, and to guide us on the fundamental side and what's happening in the macro space, we have been joined by Ajay Bagga. A very good afternoon, and thank you so much for your time, Rajesh and Ajay. And Rajesh, let me come to you. 19,800 is what we have scaled past, and also on the Bank Nifty 45,100 is where we have touched today. So going ahead, what are the targets coming in for Nifty 50? 20,000, are we very close to that?
Definitely. So the kind of momentum we have witnessed throughout the week is clearly indicating that yes, we are heading towards the 20,000 mark. Yes, possibly in the coming week, we are going to scale up to the level of 20,000, or we can surpass that level also. Very strong buying action across the sector has been there. Short covering was clearly visible on 19,700 strike. That was the major call concentration area. So that short covering is clearly indicating that now base is shifting higher towards 19,600, 19,700. Put writers are now acting as writing positions are taking place around those levels. So put base is shifting higher, and we expect that this momentum can extend towards 20,000 in the coming week. Even on the Bank Nifty front also, very strong buying action throughout the week. Most of the PSU bank as well as the private bank has performed well, and looking at the setup for Bank Nifty, now we are holding this 45,000 level on a weekly closing basis. Looking at the data setup, yes, we do expect that Bank Nifty can also support to the this momentum, and on the higher side, 45,600, 800 could be the possible target in the near term basis. So for Bank Nifty, the immediate support for coming week is at around 44,700. Till we are holding this level, there is a possibility that the Bank Nifty can also contribute to this rally, and we can see a level of 44,600 to 800, 45,600 to 800 in the coming week.
Well, thank you for that. But the next question going to Ajay Baga. This is Lisa on the other side. Good afternoon. Ajay Baga, we saw the broader market indices, they are at record highs, and pockets like sugar, defense, they have been quite euphoric, and we have seen that kind of frenzy. But which are the other pockets that can see some run up going forward?
Well, already I would say market has done very well, especially the mid cap and the small cap segment. So I would think there will be continued traction in the railway stocks, in defense, sugar, as you mentioned, industrials are doing very well. Real estate, after a 10-year down cycle, over the last 1 year, we have seen real estate traction picking up in the broader market, and the stocks are also doing well. So real estate should continue to do well. Media is looking strong as well. Media, small sector, but that can be looked at. Banks were trailing, and today has been a strong up move on this Friday. But going ahead, we have to really watch out for the credit trends on the banking side, the cost of fund trends, those will become important. But banks remain a very strong sector overall for the Indian market. On a contrarian bet, I think we can start looking at IT, but in a slow, phased manner over the next 3 to 6 months. There will be good opportunities coming in IT. The worst seems to be over as far as IT is concerned.
Okay, worst seems to be over as far as IT is concerned. That's the word from Ajay, as well as he also highlighted a couple of pockets like media to be looked upon. But Ajay, what's your take on the banking space? Because that has been an underperformer on the back of the ICRR announcement. But now on Friday, when we see a positive news coming in on that front, and the rally was also quite exciting to see. But what's your take on the ICRR discontinuation, as well as going ahead? Do you believe that the underperformance in banks is overdone now, and are they likely to perform well on the positive side for the upcoming week?
Yeah, RBI had brought the ICRR basically to address the issue of excess liquidity coming in on the back of 2000 rupees notes coming back into the banking system. And over 80% of those got deposited as further deposits or current accounts into the bank. So RBI wanted to suck out that liquidity. They have been successful. In fact, the banking sector went net negative about a week back, where they were borrowing about 25,000 odd crores on a net basis from the RBI window. So RBI has met its objective, and slowly, in a calibrated manner, it's releasing this liquidity back into the system. That was met with a lot of applause by the markets, and the banking stocks were bid up on Friday. We expect that momentum to continue. The key factors to look at for the banks will be, one, the cost of funding for banks. So does the liquidity come back to slight net positive, or will RBI maintain the constraints on the liquidity to maintain to manage inflation in a high oil kind of an environment? The second will be, what are the credit trends? With the next quarter numbers coming another 1.5 months away, those will become the key determinants. And then, of course, the global scenario. What does the Fed do on 20th September? Our thesis is the Fed holds for now, but it will be a hawkish hold. And then November 1st will be very data dependent on October. But we think that we have reached the peak of the US rate hike cycle. Europe is also, if not the peak on 14th September, we are about one rate hike away. Bank of England, Andrew Bailey has already said they are very much near the peak, maybe one more rate hike at the most. So the world is gravitating towards peak interest rates. And as that comes off, normally it's not very good for the stock markets or banks. Rather, when the rates go up, the banks tend to do much better because the deposits are priced later and the loans are priced much quicker. So on the reverse cycle, their cost of funds will be higher and the new incremental loans will start coming in at lower rates. But I think that cycle is at least 6 to 8 months away. So we have a Goldilocks period where the economy will do well and banks will do well for the next 6 odd months.
Well, yes, thank you, Ajay, for that. That's a word coming in that banking stocks are expected to continue the momentum going forward. But Rajesh, coming back to you, on the power stocks, they are seeing a powerful rally, and this is on the back of FBI buying into power stocks, as well as the government also announced that they are going to float tender for the gas-based power. So any more steam ahead for power stocks, and what are the stocks that you are looking at?
So definitely, whole sector is showing good traction, and most of the power stocks managed to give breakout on the weekly as well as on the monthly time frame. So looking at the breakout on the longer term time frame, we do expect that furthermore momentum we can see in the coming weeks for the power stocks. From that space, we like NTPC, Tata Power. These two stocks are looking very promising. Both stocks have done well in last couple of weeks, and the kind of breakout which we are seeing for NTPC, Tata Power is clearly showing that another 4 to 5% momentum we can see in the continuation of this uptrend. From the same sector, IEX that was very underperforming stock now has shown very good breakout on the weekly chart. Triangular formation breakout has been done on the IEX weekly chart. Looking at the breakout, we expect that IEX can also exhibit furthermore upside towards 150, 155 zone. So that stock can be looked at for near-term trading perspective with stop loss of 136.
Okay, so that's the take coming in on the power stocks. But with this, viewers, it's time to slip into a short break. And experts, please hang on. We'd like to continue our discussion just after this very quick break.
Welcome back to Your Trades, and we have on our show Mr. Ajay and Rajesh, who will be discussing the outlook going forward for the next week. Hello. So going back to Rajesh. So Rajesh, what are the stocks that are on your radar in this kind of market?
So the kind of buying action which we are seeing in the market, there are four buying ideas which we are focusing for next week. First is from real estate space, that is Oberoi Realty. A series of higher top, higher bottom formation is taking place. Very strong buying action. Stock is continuously moving in upsloping channel on the weekly chart. So we believe that Oberoi Realty can continue furthermore upside towards 1240. Strong long addition is there in the today's session. One can buy with stop loss of 1150. The second stock that we like, that is Reliance Industry, is looking very attractive. Stock almost closed near to the day high, around 3.5% open interest addition on the long built up. So looking at the data setup for Reliance Industry, we expect that Reliance can continue furthermore upside towards 2500. So one can buy Reliance Industry with stop loss of 2420. The third stock is from Adani Group, that is Adani Port. Again, here also we have seen a long built-up setup, and looking at the overall setup, we expect that Adani Port can scale up to the level of 850, 860 zone in the coming weeks. So Adani Port can be a buy with stop loss of 805. And fourth stock is CDSL. Stock has reversed almost its a 5-week down move, and with a volume action. The kind of breakout which we are seeing on the weekly as well as on the daily chart is clearly indicating that this stock can really further from the current level, and 1350, 1360 could be the possible target on the high side. CDSL one can buy with stop loss of 1245.
Best part getting Rajesh on board because usually we get two picks, but Rajesh happens to give that bonanza to all our viewers there. Four stocks pick coming in from Rajesh. Thank you so much for that. But Ajay, coming to you because this particular week and the week upcoming is very important in terms of the G20 summit. And from Friday itself, by the time President Joe Biden is in India, we have seen news flow like NVDIA flowing in, collaborating with companies. So, what's your take? How important it is this meet for India, as well as from investor point of view, any particular sector that investors need to keep on radar that could be interesting enough?
I think, a lot of things will happen, Shrishti. Nearly 13 bilaterals the Prime Minister is doing today itself. So we are expecting a lot of agreements. But look at the Gulf money coming into India, Gulf orders coming in. We have seen industrial companies announcing huge orders from the Gulf, and also Gulf investments will come in. Second will be technical collaborations with US, UK, France. We are expecting some announcements there, and stocks have moved in anticipation. So be it railways, be it infrastructure, be it technology, semiconductors, we are expecting a lot of investments to be announced and a lot of agreements. So all these sectors will be beneficiaries: hardware, technology, semiconductors, investments from the Gulf and order flows from the Gulf for our industrial giants.
Okay, thank you so much, Ajay, for helping with your take on this particular summit and the sectors that one need to keep on radar. But with this gentleman, we are out of time discussing about the markets with you. Thank you so much, Rajesh, as well as Ajay, for joining us today on ET Now. And moving on, three of the biggest voices on ET Now have different themes to bet on. While Rishabh Seth, co-CIO at Karma Capital, believes that the power is a long-term structural theme, Manishi Rai Chaudhary, Asia Pacific Equity Strategist of PNB Paribas, says that the government's infra push makes the industrial sector a good bet. And Ajay Srivastav, CEO of Dimensions Corporate Financial Services, on the other hand, is bullish on the defense sector and believes that the holding stocks of defense companies is a huge positive. Let's listen into their take going ahead.
It's a very longer term structural theme. Only thing we have to balance is how this power growth will play out in terms of renewables and existing thermal assets, as well as how the distribution behaves in terms of being able to collect money from consumers to be able to pay for this power. Because clearly in the past we've seen that that's where we've struggled, is that we are not bad at generating power, but we were poor at collecting power from the consumers and making them pay for it. And therefore, a very small set of consumers pay a significantly large amount of, or bear a significantly large amount of burden for it.
Industrials is a sector that we added sometime in June to our Indian silo of the portfolio. The government expenses on infrastructure, that has been going up steadily. If one looks at the proportion of government capex as a proportion of total government expenditure for the past 3 to 4 years, it has really skyrocketed. It used to be about 15 to 17%. It's gone up to 25% in the latest budget.
If you're in India, if you don't buy defense space, I think it's quite a dumb idea, because for next 30 years, India's defense requirement will be humongous. The domestic indigenous policy is for there to see. Therefore, you could not, you may have a 1 year underperformance because of the share price, but you won't have a 10-year underperformance or 5-year underperformance. So I would still say defense sector definitely is a plus. No matter if you don't have it, you have to enter sometime. You can't wait. Only thing is, when you enter this time, just ensure you have firepower on the side, that when the time comes, don't chicken out, buy more.
Well, so that was the top themes to look out for the long term. But Vamakshi is here to share the cues for the next week. Over to you, Vamakshi.
Well, yes, let me first start off with some of the important economic cues to watch out for. We will be watching out on the domestic front for the industrial production, CPI, as well as the wholesale prices. Now, as far as the US markets are concerned, watch out for the CPI as well as PPI data. ECB rate decision is another important factor that we will definitely be keeping an eye out on. Now, definitely the primary markets have been abuzz of late. Watch out for the listing of Rishabh Instruments as well as Ratnavir Precision Engineering next week. Apart from that, 2 IPOs are opening for subscription, and that includes RR Cable Limited IPO as well as Sami Hotels Limited IPO. Apart from that, an IPO that is of EMS Limited, it happens to be the last day to subscribe to this IPO on September 12th, so definitely keep an eye out on that one as well. Now, moving on to the secondary markets, keep an eye out on Paytm on September 12th because an AGM is expected to happen, and we will definitely be keeping an eye out on the management commentary that comes in. Apart from that, there's a lot happening on the corporate front as well. TVS Supply Chain, the first quarter earnings are expected on September 11th. Watch out for L&T on the same day as well because it happens to be the last day to buy the stock in order to be eligible for a buyback. Power Grid will also be in focus as it happens to be the last day to buy the stock in order to be eligible for the bonus issue. The lock-in period is also ending for Divgi, Tork Trans, IQ Lighting as well as SBFC Finance on September 11th, so definitely keep an eye out on all of these counters. HDFC Bank will also be in focus next week as the FTSE and Sensex rejig related adjustment is expected to happen on September 15th. Lock-in period is also ending for nearly 20% of shares of Happiest Minds. Now, there are some other important events that definitely are worth tracking. The G20 summit in New Delhi is expected to happen from September 9th to September 10th, so definitely keep an eye out on that one. And lastly, keep an eye out on Apple's event of the year, that is Wonderlust, where they will be unveiling the iPhone 15 as well as its next generation smartwatches. So lastly, these were all the important events as well as triggers that you need to keep an eye out for the trading session next week.
Well, thank you so much, Mamakshi, for getting us that list. But with this, viewers, we're completely out of time in this edition of Your Trades. It's a goodbye from me and Lisa and the entire team who put the show together. Thank you so much for watching and have a very happy weekend.